In this video, we're going to cover a couple different frameworks that I've created that help beginners get started investing in the stock market. We're going to start by talking about a couple nitty-gritty strategies, diving into specific details on accounts, and then we'll go from a high level, which is my favorite part. So if you're a new investor and you're not sure what strategy is right for you, stay until the end and we'll talk about an awesome framework that I've created that might help you decide which strategy is best for you. The first part we'll talk about in this video is from a very low level. We'll actually get into the nitty-gritty of the specific accounts and how I personally have allocated my money. And please, as always guys, remember that this is not financial advice. Please don't just run out and copy this without doing your own due diligence. I am not your financial advisor, and this is not meant to be financial advice. Rather, this is just an explanation of what I've done with my money in the past and what I think is a good strategy and what I implement for myself. I hope it gives you some more information to think about and maybe consider for your portfolio after you've done your own due diligence. Back when I was a W-2 employee, which I'm no longer a W-2 employee, but when I was, I had an employer that offered a match, which meant if I put $1 into my 401k, they would match it up to a certain percentage. And so what I learned and what I personally feel is that it's very difficult to beat a company's match with your 401k. It's pretty much a 100% return on your money, and it's pretty much guaranteed. Of course, there is some nuance here in terms of vesting and how much companies contribute, things like that. But for the most part, if your company contributes, for every dollar, let's just say they contribute 6% match. Let's just say you put $1 in, they're going to match that for $1. That's an instant 100% return up to your 6% of your salary. And so for me, I believe that that is where most people should start. That's where I started, was at least going up to the match in your company's 401k. Now, once you get past the match, there's some debate on what is going to be the right philosophy, the right approach. But for me, at least when you're first getting started, it always makes sense to take on the company match first. Once you've gone over your company's match, let's just say the company match will continue with the 6% example. Let's just say that's the case, but you want to contribute more than 6%. Personally, what I've done in the past was, because there's no match on that, I have chosen to put that into IRAs instead of putting that into my 401k. Typically, there's no problem with you just upping your contribution over the company match and putting more money into a 401k. As long as you're not over contribution limits, typically that's going to be okay. But for me, the reason that I didn't do that was because a lot of times I don't like the options that are available in my 401k. With an IRA, you have pretty much an unlimited amount of options. You can do individual stocks. You can most likely buy most of the same funds that you could in your 401k anyway. You could even trade options. And if you really want to get complex, there's things such as self-directed IRAs where you can buy even more alternative assets like Bitcoin and real estate. But just speaking broadly, with a normal Roth or traditional IRA, I like the opportunity to be able to choose individual stocks and whichever ETFs and index funds that I want. So that's why if I have anything above the company match, I personally chose to put that money into an IRA. Now, IRAs do have a contribution limit, and every year it changes. In 2021, as I record this video, the match was around $6,000. Next year, if you're watching this in 2022 or even beyond, that limit might be different. So check your IRS guidelines to see what the contribution limit is in the year you're watching this video. But regardless of what the contribution limit is, if you've matched in your 401k, you've reached your contribution limit in your IRA, and you still have money that you want to invest, another account that a lot of people really like are HSAs. I'm not going to go into all the tax nuances of HSAs, but if you have a high deductible health plan, which I do, I use an HSA. And then again, there's contribution limits with those as well, just like there is with all the accounts we've talked about so far. So if you meet the HSA contribution limits as well, now that's when I personally circle back to my 401k and increase my contributions up to the contribution limit. If you hit that, then pretty much your option to go from there is an individual brokerage account, which is taxable, but at least you're still investing that money. This is exactly the approach that I've taken with my money. And just to summarize, I start with a company's 401k up until the match, and then anything above that goes into an IRA up to the contribution limit. Then anything from there goes to an HSA, and then anything from there goes back to a 401k up until that contribution limit, and then from there goes into a taxable brokerage account. That's what's worked really well for me, And that's how I continue to invest these days, except for without the 401k because I'm not a W-2 employee anymore. Now I want to zoom out a little bit, go a little bit higher level, and talk about a framework that I've created that helps new investors decide which strategy is right for them. Because even if you're investing in those different accounts that we just talked about, you still need to have an investment strategy within those. If you choose to use an IRA, you still need to have a strategy on how you're going to invest. Are you going to buy individual companies, or are you going to trade options? Are you going to buy index funds and ETFs? Or are you going to buy mutual funds? Are you going to be active, or are you going to be passive? And so you still need to have a strategy that's going to work for you. And so how do we do that? I've created a framework that helps new investors clarify how they can decide which strategy is right for them. And I hope it can help you decide which strategy is right for you as well. I don't often get asked about which accounts people should use to invest in, which we just talked about. I do get asked that, but not super frequently. More frequently, I get asked, do I buy individual stocks? Do I buy cryptocurrency? Do I swing trade? Do I buy growth picks? Do I buy mutual funds or ETFs or index funds? What is the right strategy for me? And so that's why I developed this framework that we're going to talk about now. Usually people want me to give them a specific example or a specific stock pick. Go buy Facebook or Microsoft or whatever. And those are not stock pick recommendations. Those are just random companies that I threw out there. But usually that's what people want as an answer. But instead, what I've done is given them this framework. And it's, imagine you're coming down this road, your investment journey, you're going down this investment road, and now you've reached a fork. Okay, down one path, let's just say on the right, there's a path for passive investing, which is typically index funds, ETFs, and it can be mutual funds. On the left is going to be your more active approaches, which are going to be stock picking, growth or value investing, cryptocurrencies, etc. Now, how do you know which path to go down? What I highly recommend people do is they buy one book for each of the two paths. So on the right side, I highly recommend people buy a book by Jack Bogle, the founder of Vanguard. It's called The Little Book of Common Sense Investing. So if you're interested in checking that out, you can click the link below. And then on the other side, on the individual stock picking side, I highly recommend a book called The Dhando Investor by Monish Pabrai. And again, I'll put a link to that book in the show notes below as well. I actually have that book right here on my bookshelf. It's a great book. It's one of my favorites. Now, before any money is invested, I recommend this person reads both of those books. They have both those books at home, and they need to read them both. And then once they're done, they need to sit down and think about which strategy fits them better. Did Bogle's approach of passive investing speak to you more? Did that make more sense? Or did Monish Pabrai's approach to individual stock picking, value investing, did that make more sense to you? And then decide which philosophy you believe in more, and then go down that path. And then start investing your money in a way that matches the philosophy that you just read about that makes the most sense for you. It doesn't matter which order you read the books in, just read them back to back. And almost every person that has done this and come back to me, they have said that one way has spoken to them more than the other. And that's great because that's given them clarity, and now they know which strategy is right for them. There are some people though that say that both strategies speak to them. And in that case, I recommend people typically put money into one strategy first. Get started that way, the one that spoke to them more, because it's unlikely that they're going to speak to you evenly or that you're going to understand them evenly or have the same conviction in them both. So I usually recommend people get started with one strategy first, and then once you've kind of mastered that, understand how it all works, then you can dive into the other strategy, whichever one that might be for you. After you've mastered those other two strategies or picked one and mastered that, and now you want to add a second strategy, you could pick up a book about Bitcoin or any other cryptocurrency that you're interested in, or maybe it's real estate. Whatever that other opportunity is, I usually highly recommend you reading a book about it before you have actually invested any money and really understand if that is a strategy that you, one, believe in, you have conviction in, and two, have time to implement. There are a lot of people that believe in individual stock picking, but maybe they have a demanding W-2 job or they have family at home and they don't have the time to invest in analyzing and researching all these companies. In that case, individual stock picking might not be right for them. Ultimately, what I tell people is I don't care what they choose. I think both strategies work. I think you could pick index funds and do really, really well and invest pretty much no time in it and never think about it again and just continue on with your life, and you'll beat a staggering number of money managers. This number changes all the time. Whether I mention the number now or next week, the number is going to be different, but it's said that you could beat 95% of professional money managers who do this full time just by picking index funds and never changing or selling that strategy. Now there's some people that want to go the individual route. I think that's fine too. Like I said, I don't care which strategy you choose. I just want you to choose a strategy that is right for you. And most importantly, I want people to fully understand what they're investing in. It doesn't matter to me what you invest in. It could be cryptocurrency, it could be artwork, it could be anything you want. My only point is that I really need you to understand what you're buying before you buy it. And I really think that this philosophy and this framework that we just went through in this video is a great way to get started understanding which philosophy and strategy speaks to you, which one you have conviction in, and which one fits your personality and lifestyle best. Thank you guys for staying all the way to the end. I hope this framework on how to decide which strategy and which philosophy is right for you as an investor helps. If you know somebody that's struggling to try and decide which strategy is right for them, I'd really appreciate it if you share this video with them. Hopefully it can help them as well. If you have any feedback or thoughts on this framework, I'd love to hear it. I'd love to hear any thoughts you guys have. And if you implement this, I'd love to hear how it works for you. I'd love to hear success stories about how my different frameworks are working for other people. Feel free to drop me a message on Twitter or Instagram. My username is Robert Leonard. And if you guys enjoyed this video, be sure to like, subscribe, and hit the notification bell. That will help with the YouTube algorithm. Simple, quick way that you can support us. And that allows us to continue to bring this awesome content to you completely for free. I really appreciate all the support. And until next time, see you guys.